Welcome back. Well, I'll be sitting in for Anita now for the markets. Let's see what's playing out in Africa. Yeah, we'll see mixed sentiment there on the African continent with the NGX still trying to decide, what I'm going to go. That's talking about the NGX, but we're seeing weakness right there in today, 0.21%, 97,000, so the 98,000 level, that's gone for now at intraday, but we'll see what plays out at the end of trade. We still have till 2:30 to figure that out. For the GSC in South Africa, 85,000 is also down, but marginally 0.07%. All right, let's bring in OG Emmanuel now as a fixed income dealer, Access Bank, to bring us up to speed of what's playing out right here. Great to have you on the show.
Hi, Larry. Thanks for having me.
So we're seeing the federal government 2024, that's a November bond auction. Talk to me about the number and how it compared to one in October.
Okay, so on Monday, the federal government held this monthly bond auction for the month of November. And the bond auction, we saw the federal government offer 120 billion across two maturities, the 29s and the 31s. In terms of participation at that auction, we saw over 300 billion worth of subscription, and the federal government also sold those close to the amount or bid at that auction. That led to an marginal increase in rates on both the 29s and 31s. We saw the 29s close at 21%. The October auction, that closed at 20.75%. So pretty much a 25 basis points increase there. For the 31s, we saw that close at 22, which is a record high looking at the bond auctions historically. And that also increased by roughly 25 basis points. So we saw increase across board. Post-auction, we have been seeing some slight demand coming for the 2031, with trades being consummated at 21.95. Market participants are a bit cautious because of the MPC next week. So everybody is pretty much waiting to see how hawkish the MPC will get in order to participate more in that bond auction.
Right, all eyes on the MPC next week. But how would you gauge performance so far in the fixed income market this week?
I think I would just say there's just been a cautious trading session, both in the NTB market and also in the bond market. Both markets having auctions. The bond market had an auction on Monday. NTB was on Wednesday, and we saw further increase in stop rate as well, particularly on the long end from 23% to 23.5%. So I think markets are a bit jittered with, what's the plan? The government seems to be overselling, both on the bond side and also on the NTB side. So everybody's a bit cautious. But nevertheless, for the NTB market, we've been seeing some real money demand coming. The auction closed at 23.5, but we're seeing trades being consummated at 22.8. Thing just showing you the continuous demand from both pension funds, asset managers, and also the retail investors looking to take advantage of that attractive yield. If we look at it at 23%, the yield is roughly at 29. So just imagine investing your money and earning 29%. It's more of like MMM at this point. So we'll be seeing a lot of a lot of investors looking to try to pick those attractive yield.
Yeah, talk about attractive, 29%, quite attractive, I must say. But scenarios are going to play out. That's for Tuesday when we have the decision for the last rate setting meeting for 2024. So what do you think a hold would mean for the markets, or another hike, maybe 25 to 50 basis points? What are scenarios you're expecting?
I think a hold would renew a bullish bias in the market, because what market is expecting, like given the inflation numbers, based on consensus expectations so far, market is expecting a 25 to 50 basis points hike in the MPR rate. But if that doesn't happen, I think we'll see a renewed buying sentiment across board. There's a FAC inflow coming in this today or earlier next week that will most likely drive that buying sentiment. But however, we see a surprise hike, a high greater than 25, a high greater than 50 basis points at that MPC on Tuesday. We'll see markets going back to the shell, and expecting yields to continue to increase on the back of this. On the back of the hike or that we might see on Tuesday. But nevertheless, there's still that Eurobond conversation that's currently going on. They recently got the approval of 2.2 billion to issue for external borrowing. Most market participants are expecting that there might be an Eurobond issuance in December. That's based on expectations should ease pressure on the domestic borrowing. But nevertheless, a lot of interesting things to see moving forward.
And definitely, we've heard analysts, say that, or the government actually did say that this Eurobond borrowing would help, bolster our foreign reserve. So, what are you seeing for the Naira this week? Is it going to be a gain or a loss for the total week trade? And what are you seeing going into next week for the Naira?
So I think this week we've traded relatively flat. We saw the CBN intervening in that market yesterday, where they sold to some selective banks. I think that's what we'll continue to see moving forward, where we'll remain stable at 1670 to 1680, and the CBN continue to intervene, not aggressively, but marginally to some selective banks in order to provide more supply into that market. But nevertheless, the demand pressure remains persistent. We continue to see that every day in the FX markets. So a possible successful outing at Eurobond auction, Eurobond issuance next month should definitely drive more confidence in the Naira. But nevertheless, market will be waiting to see what rate the government will be able to get those funds at, and the amount of size that they issue as well.
Right, and it seems we've not really seen sales to the BDCs.
I think at this point they've kind of locked out the BDC from that space. We saw them aggressively doing that, sometime mid this year, when they resumed that BDC sale in order to meet retail demand. But I think after that massive sale of 800 million that they did, but we have not really seen anything going to the BDC. So I think it will be interesting to see the comments that they make at this NPC meeting regarding what they look to do in the FX markets, not just on the official market as well as the BDC market, to see if we're going to see a resumption in the sale of BDC, because when that happened, that kind of helped in the appreciation of the Naira. But since that have not happened, we've seen that massive spread between where the official market is trading and where the parallel market is trading. I think currently the parallel market is roughly at 17.5, 17.4, while the official market is still at 16.8, 16.7. So you see that 60 to 70 Naira spread in that market, all on the back of the fact that we've not been seeing some decent supply going into that BDC market as well. But definitely will be interesting to see how the monetary policy address these concerns for markets, if the supply will just likely still remain with banks without and also shutting out the BDC market.
All right, we'll see if the BDCs got some action, at some point. But thank you so much. It was great having your perspective. Oji Manuel, the fixed income dealer at Axis Bank.
Thank you for having me.
All right, now let's get a check on what's playing out with other markets. Now we'll see in the U.S. For the stock futures, they edged lower today with Wall Street poised to end the week with gains in three major averages. But we'll see the Dow Jones Industrial Average at the time of taking these numbers there, 0.03% up, 0.04% down for the S&P 500 futures. Then we see the tech-heavy Nasdaq. That's a big 0.18%. So the moves in futures come after a modestly positive day on Wall Street. Yesterday, the Dow rose about 462 points. That's about 1%, and the S&P added about 0.53%. Nasdaq was, little change, closing at marginally down, but we're seeing a more convincing opening. That's for the Nasdaq futures. All right, let's get a check on other markets we track. Now we're seeing Asia. It's mostly markets mostly rose in Asia today. 0.68% for the Nikkei, 38,283 points. A convincing 1.89% rise there for the Hang Seng Index at 19,229 points. Other markets we track in Asia. We'll take a look at the Nifty 50. I see there's a recovery there, 1.54%. 23,707 points, and the Shanghai Composite, big drop there, 3,267 points, 3.06% to close. That's for the markets in Asia.